RBI goes slow on rates, limits increase to 35 basic points. Worldwide slowdown can dent India's growth to 6.8% from the 7% projected earlier, says Central Bank Governor Sashikant Das. But adds the worst inflation is over for the country. The Reserve Bank of India on Wednesday raised the policy repo rate by 35 basic points to 6.25%, downshifting gears from the consecutive increase of 30 BPS, and scaled down GDP growth hopes for the year to 6.8% from 7%, even as the Governor Sashikant excluded confidence about the economy being resilient and asserted that the worst of the inflation was behind us. 100 basic point equal 1 percentage point. The central bank has retained its inflation projection for 2022-23 at 6.7%, noting that inflation will ease but stay above the 6% upper tolerance limit set for the RBI. Mr. Das vowed to keep an urgent eye on evolving inflation dynamics, even as the cooling global price for crude oil, commodities, and other items extend hope for the relief. Having hovered well over RBI's upper tolerance limit of 6% since January 2022, retail inflation eased slightly on a substantial basis to 6.8% in October. But Mr. Das noted that core inflation remains sticky and the medium-term outlook is exposed to heightened uncertainties from geopolitical tension, financial market volatility, and risking incidents of weather-related disruption. RBI Deputy Governor Michael Patra said the moderation of inflation will be very grudgy, very uneven. So the central bank must first shepherd inflation firmly into the tolerance band, that is below 6%, and then to the 4% target. The RBI now expects inflation to average 5.9% in January to March 2023 quarter, drop to 5% in the first quarter, that is Q1 of 2023-24, and edge up to 5.4% between July and September 2023, assuming a normal monsoon. The central bank believes that the economy is resilient, with the quarter 2 of 2022-23 clocking 6.3% GDP growth in line with its estimate, and economic activity gaining further strength in October, bolstered by urban consumption and a recovery in discretionary spending. However, it expects GDP growth to wane to 4.4% in quarter 3 and 4.2% in quarter 4, owing to adverse spillover from the global slowdown and its negative impact on India's export and overall economic activity. The biggest risk to the outlook continue to be the headwinds emanating from protracted geopolitical tension, global slowdown, and tightening of global financial conditions. Real GDP growth is projected at 7.1% for quarter 1 and 5.9 for quarter 2. Even after this revision in our growth projection for 2022-23, India will still be among the fastest growing major economies in the world, the statement said. Thank you.